This video is set out to answer the question, did China help contribute to the 2008 credit crisis? When you talk about the credit crisis, not a lot of people associate it with China, but after this video you might just well do so. Before we answer that question, what we'd like to do is just quickly run through a few key details on China that not a lot of people will probably know. Prior to 1979, China had an average annual salary around 1/3 of the African continent average annual salary. Around 2012-2013, China's growth rate had accelerated so much that the average annual salary of the Chinese people was around 5 times that of the African continents. So in 32 years, China demonstrated an average annual growth rate of around 9.9%, which has never ever been seen before in human history. Japan came quite close, but their economy stagnated and collapsed. If you would like to know exactly how China managed to do this, because around the same time in 1979 there was many other developing countries employing pretty similar tactics to what China used, but their economies stagnated and collapsed. However, China's has kept growing. This video is going to focus on mainly the Chinese government and what they did with currency manipulation and bond purchases in order to achieve that growth rate which they have done. So if you want to know the ins and outs of the Chinese story, click the link below this video to read our article on it on our website. Those of you that have read through our article on what affects foreign exchange rates will realise that when you get a poor country with a low valued currency such as China with the Chinese yuan, what you will find is that it is very cheap for high income countries such as the USA, Germany and the UK to keep buying produce from China. However, if the markets were just left to basically let this happen, what would happen is because these countries are selling their dollars, their pounds, their euros in order to buy Chinese yuan, in order to buy from China products, what would happen is demand for Chinese yuan would increase, which would push the price up against the other currencies. So basically, in layman's terms, what this means is that the more you buy from China, the higher their currency valuations will go, and it makes it a lot more expensive. So if the government from China did not intervene, what would eventually happen is it wouldn't be cheap to import from China anymore. However, the government did intervene because basically what China wanted to do was it wanted to have a export-led economic growth. So it wanted to keep exporting goods to high-income countries in order to create jobs in China and to invest that money in China and grow the wider economy. Now, how did China do it? How did China make sure that the Chinese yuan stayed low in value compared to the US dollar, which basically was the biggest consumer of Chinese produce? The Chinese government employed a very clever tactic in order to ensure that the disconnect in price values between the US dollar and the Chinese yuan did not close, because they wanted to always make sure that it was cheap for American businesses to buy products from Chinese businesses. Because what that would do was it would make sure that they always had fresh orders coming in, they was growing their businesses and employing more and more Chinese people, which would grow the economy. Now, what we'd like to question is what the Chinese government did and the tactic they employed. Did this have a knock-on effect which caused a ripple effect which may have helped contribute to the 2008 credit crisis? What they actually done was they pegged their yuan against the dollar at a set exchange rate. If the dollar would depreciate, then what they would do is they would employ the tactic that we're about to discuss and make sure that the yuan depreciated as well. Basically what the Chinese government did is if the dollar started to depreciate and the yuan started to appreciate against the dollar, they would print excessive yuan, which would reduce the value of the yuan. However, that wasn't just enough for them. What they actually done was they sold their yuan into the market and bought dollars. And remember from our exchange rate video, if you sell a currency against another and keep doing it, what will happen is the yuan will go down, and as you're buying dollars, it will go up. They didn't just stop with this though, because their central banks don't just want lots of dollars sitting in the safes, because dollars don't earn any money, it's not an investment. So what China did was they bought the safest US dollar denominated asset that they could, which just happened to be US treasury bills. And this is where we start to question, what effect this had, and did it actually cause or help cause the 2008 credit crisis? Something just as important that we need to ask is that when you actually find out what China done, will this cause another crisis in America? Because some people, and you read it a lot in the news, say that it will. However, in this video we have our own theory and we will present you with facts so you can make your own assumptions up. But back to the 2008 credit crisis. Because China became such an aggressive buyer of US Treasury bonds, what this did was push the value of these bonds up and the interest on it down. Basically how this works is that if you want to borrow money and there are a queue of people wanting to lend you that money, you don't have to pay as much interest, because if people were climbing all over each other trying to lend you money for a little bit of interest, you can be quite greedy and say, well, I'm only going to pay you a little bit of interest. And that's basically what happened. Where China became this massive player, massive buyer of US Treasury bills, what it done was put the interest payments that the government needed to pay out, it lowered it. So if you are an American person working in a normal job and you have excessive disposable income that you want to invest, if you look to buy a US Treasury bill, you've noticed that the interest rate's gone down a lot because China's aggressively buying it. The US government don't need to give you a healthy interest yield. So when you've got, because America is a high income country, a lot of their population has money to invest. So if they don't want to invest in treasury bills, then what can they invest in? Either stocks and shares, or they can invest in real estate or property to let it out, because that will give them a better return on their money than the US Treasury bills. And what a lot of people will say is that this helped cause a bubble within the property market, because there was more and more people pouring money into buying investment houses. It caused the demand and the prices of property to increase. Now this caused a speculators market, because lots of people realised that house prices were going up suddenly, so they was willing to pay these higher prices because they expected it to rise even quicker. This had a knock-on effect again with the banks, because the banks see that buying houses was quite a safe investment now, because properties were going up quite quickly. So they were lending out mortgages to people that they wouldn't do normally. And this is where you may have heard the term the ninja loans, the no income, no jobs or assets loans, where the banks were lending it to any Tom, Dick and Harry who was willing to basically buy a house. So this led to a crash in property prices, which pretty much was a major factor, a major player in the 2008 credit crisis. So what we have established is that by China trying to artificially keep its yuan low against the US dollar, what it's done is it has acquired a huge holding in US Treasury bills, which has made the US people less inclined to buy that as an investment. The final bit of this video will talk you through what might happen next. And can China actually cause a massive recession in the USA by dumping these treasury bills? Now that China has become more of a developed country, it's actually decided to break the peg with the US dollar. The Chinese yuan is now allowed to loosely float against a basket of other commodities, but this is where we need to ask the question, could China cause another mass recession in the US, which may knock on in other countries? Because China is still the biggest foreign holder of US Treasury bills, some people say that when China finally stops buying the bonds and starts selling them, it will cause a massive reduction in price of the bonds and the dollar will tank in value. What we would say is China is not that silly. They are a lot more clever than people will give credit to. They have a strategy for reducing this without causing a massive recession in the USA. Because if they did cause a recession in the USA, let's not forget the US is a big customer to them. So if they caused a massive recession in the US and a lot of businesses went under, it would have a knock-on effect to China's revenue, and China does not want that to happen. When you look at the actual figures of how many trillions or billions in bonds that China actually owns in the USA, when that number declines over time, what you will find is other countries such as the UK will actually increase their holdings in US Treasury bills. And this is how China very cleverly will be able to start deleveraging their risk in US Treasury bills. Because what they will do is they will start buying UK Treasury bills. To do that, they need to sell their yuan to buy Great British pounds to buy the Treasury bill. That in turn will push the value of the pound up. If the pound appreciates too much against the dollar, then what that will do is the American businesses that currently buy products from the English businesses, it will make it so much more expensive. So they will stop and they will think, we're not going to buy from the UK anymore because it's cheaper now to actually make it at home, which will cause job loss in the UK. So the UK government needs to intervene if they see the pound accelerating up against the dollar. So what then they may choose to do is they will sell their pounds to buy dollars to buy US Treasury bills. Now notice what China has done. It's stopped buying aggressively the US Treasury bills. It's diversified its bond purchases by buying some UK Treasury bills. That has caused a knock-on effect which has caused the UK to sell their pounds, buy dollars and increase their holdings in US Treasury bills. So the answer to the question, could China cause a massive recession? Yes, in theory they could, but the tactics that they're employing, it is very, very unlikely. Don't forget to click the link below this video in order to read up more on the story on China.